Okay, guys, super excited. How are you doing? Um, okay, guys, super excited. How are you doing? It's another day, and I got a feedback from one of us who said, "Great video, thanks, Mr. Mayowa. We like to show how to use Trendline with other confluence, and a lot of confluences you can use in the market when you understand Trendline. Okay, a lot of confluences. Okay, I'm going to do a list of a couple of them and we're good to go. So the first one is that you can use a Fibonacci retracement. Okay, you can use a Fibonacci retracement. You can use support and resistance. You can use supply and demand, which is what I trade and what we trade in the community. You can use price action. Okay. You can use price action and minimum. Okay, but today I'm just going to focus on Fibonacci retracement for you. Okay, so whenever the market starts a move, remember, if you watch the first video, we said that the market will always give us the first move, a retracement back to the trend line and up. So you have two touches that makes a trend line. Now, because you have the market breaking this high, which is a break of structure, it means that you need to wait for the market to retrace here. And when the market is retracing back here, you must be able to use the Fibonacci to be able to get a potential retracement here. So what do? You pick your Fibonacci retracement, which is here. You draw it from the low to the top. Okay, so we have a 78.6 or 0.86 zone here for your tradable zone. This is what some smart money concept traders call OTE. Okay. Okay, some will call this sniper zone, killer zone. People call it several names. Everything just has to do with retracement, guys. Okay. That is why I tell you that it's not just about the strategy, it's also about the person that is using the strategy. It's also about the person that is using the strategy. Okay, so you must know how to use the strategy and you're good to go. So if the market is also coming downwards, so you have a two move joints, the market dropped and it retraced back and it started coming back. So this is another place you would have joined your trend line. So what do? You pick your Fibonacci from here to draw it to this low. Okay, now when you draw your Fibonacci to that low, you will now have a Fibonacci retracement. Now, usually, some school of thought trade 61.8. Some school of thought trade 78.6. Some school of thought trade 88.6. Mr. Mayowa, which one is the best? You have to backtest and identify the one that works for you. A good example is AUD-USD. AUD-USD, a lot of time, okay, retraces. A lot of USD pairs like to retrace with 68.6. A lot of GBP pairs like to retrace with 78.6. Now, so a lot of Euro USD, a lot of Euro retraces between 78.6 and 0.86, 88.6. So why you must it's not like a textbook strategy that you will say, oh, because I was told to be trading 61.8. There are so many times you will trade 61.8, and 61.8 will do a short retracement, we do a short drop and still go back up. So you must be flexible when you're using Fibonacci so that you are able to trade what you see and not trade what you learned or trade what you want. So a lot of time you won't be able to trade Fibonacci in any of these places when the market retraces into it. Okay, and you're good to go. So let's go to the chart and see what we have. Okay. So a good example is GBP Chef. GBP Chef. Now, if you look at this chart, you will agree with me that we had this demand and this low destroyed. You have these lows destroyed. So you have your buy trend line here. So the market has been buying. The market has been buying. If you draw your trend line from here, the market has been buying. So all you need to be doing is to keep buying. Immediately the market broke this level, it means that you now have a major low which has been destroyed here, apart from these other lows at the top here. So what do you do next? You want to ask yourself, where am I going to be entering this sell opportunity? So if I'm going in on this, because the market has been going up, going up, going up, and it broke out, okay? So all you need to do is to pick your Fibonacci and do what? Draw it. So you can see that the market came exactly to where? So 78.6. And that will be your entry zone. Now, watch again to let you know that you have to be. So on lower time frame, when the market was going to do its own retracement, it didn't do 78.6. Let's do it together. Let's check together. You can see he did what? He did 61.8. So the 78.6, I can tell you that is your first retracement. Your inner retracement could now be 61.8. But guys, it's all about practicing. Okay, you have to practice it. Don't just come to the chart and put your money because there's a potential trade. You won't be able to have done a lot of back test. Maybe in the next video, in one of the video episodes, I'll teach you how to do back test. Okay, so that you guys can master back testing. So as it were, this becomes your what? The first move, the second move, and go straight to the third move. Now, if you join your Fibonacci from here to this place, good. As powerful as we expect the market to come to 78.6, market didn't get there. Market just went above and got to 70.1. 70.1 and started dropping. So this is why you need to understand the flexibility of Fibonacci. Okay. Some traders will say, okay, you would have used this high. Okay. It's not a bad one because I'm doing that again. Okay. Some traders will use this low. And if you use this low, this high rather, instead of this high, if you use this high, it's going to give us 78.6. Going to give us 78.6. But if you use the uttermost high, it's going to give you above 70. So, Mr. Mayowa, which one is the best? I recommend you always make your trading flexible, that you use your low, the recent high that created the low. Then you can, if the market breaks it, then you can now use this. Now, if, for example, you go in here and the market hits your stop loss, 1% is gone. If it comes back into, if it breaks it and moves to the top, let's say, for example, you now decide to use this zone. By the time you are using the same 1% or 2%, okay, you would now see that the market will use this. So if you are stocked out here, don't be angry and say that the strategy does not work, or Fibonacci does not work, or support and resistance does not work, supply and demand is the best. No, you must be able to use your risk management to play your trade. That is how it is. A businessman will not open store and sell his item anyhow, or not do a proper calculation of what it will take him to be successful at doing the business. So we must be able to ask ourselves, what am I risking? So no matter how it is, you must honor that fact. Okay? But Fibonacci is really amazing that everyone should be able to use, and we're going to be good to go. Okay, I'm going to bring up more examples that the markets obeyed. This is another one. Look at the market went as far to the top. So these are kind of trades that you have to be careful with, because when it got in here, as a matter of fact, when it got here, you have several price action. When it got here, it closed with a pin bar. You enter stop loss above your pin bar or above the red, and the market went up and hit yours. Guys, it doesn't mean that it won't work, but it only means that the investors are willing to push up the market up. So push the market up further, and the market did drop. So what happened? They actually did the 50% of this order block. So this is why you have to consider picking it, especially if you're trading higher time frame. Okay. So for me, I would recommend that when the market comes, especially into the 4 hours or 1 hour's daily zone, you have to go to lower time frame and redefine it. So Fibonacci is an amazing tool that you can use and you can perfect and do well for yourself. This is another one. From here, you draw to the top. You can see? Good. And what's happening? The market is creating what? A higher low, higher high, higher low, higher high, higher low, higher high. Okay? And another good trick you can use with trend line is for the Fibonacci is, in as much that the market is creating higher lows, higher high. In as much that the market is creating more higher highs, all you need to do is keep putting your Fibonacci. The market drops down, keep putting your Fibonacci. The market drops down, keep putting your what? Your Fibonacci. And you're going to be good to go. And immediately you notice that the trend line of your chart, of the current chart, has broken the internal chart, and it has something like this. And it has something like this. I'm coming. And it has something like this. Then that means you have to be careful, because the internal trend line has been broken. So what do you see? You use it as a sell this time around. Fibonacci, then you sell to this place. Now, when you get to this place, you have to be careful again, because right now it has hit the external. Okay, so you just have to practice more on your understanding your internal and external trend line, so that you'll be able to get the settings of your Fibonacci very, very well, because you don't want, when the market is creating more highs, Fibonacci level, Fibonacci level, Fibonacci level, and right now the market did not give you the full Fibonacci level. It went higher and dropped. So this is a what? This is an internal trend line. Then you move this into it. So when the market, sorry, this is your external trend line. So when your market did what? Did this and broke, then this is an what? An internal trend line. So the market comes up here now and you sell with your Fibonacci back here. So this is why I sometimes recommend you don't even trade here. Ignore this sell. Wait for your trend, because the market is buying. If not, you can have a lot of losses here. Maybe 1 or 2, 3 losses before you finally drop, because it didn't get to the right level of retracement. So that is how you want to make sure you're enjoying your Fibonacci. Don't forget, you want to pick a low, you want to pick the higher low, then you pick your trend line, okay? Then you pick your Fibonacci up, you pick your Fibonacci from the low to the top. Allow the market to retrace to where? 61.8, 78.6, or 88.6. Around these 3 Fibonacci level, that is where you look for your what? Entry zone, and you're good to go. I see a lot of people who trade and they just cover everything. Once it gets to the 78.6 and they can see a price action in that zone, they will just put their trade and they are good to go. Just make sure you are using your risk management, and I'll talk to you guys soon, okay? Hope this helps, okay? If this helped, type in it helped, put in the comment below, it helped, it helped, it helped. Don't forget, all you need to do, make sure you confirm your trend line, put your line there, okay? Fibonacci, good. If it's coming down, trend line, join the 2, draw your Fibonacci, let the market retrace back to the top, and you sell. So you sell here, you buy here, okay? Guys, that'll be all. If you have any questions, make sure you drop in the comment below, and you want to also share this video. And if this is your first time on this channel, make sure you click on the subscriber button and the notification bell, so that when another video will be uploaded, you will definitely be alerted immediately. Guys, have a pleasant day. My name remains Owolabi, Africa's most sought after financial market coach, and I'll talk to you guys soon. Bye.